Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers from around the world. This is your host Vaibhav. Today we are starting late as earlier at the scheduled time there were interruptions with the internet. Because of that, I couldn't really proceed with that session. So now we are here back again, and in today's session we will be looking at the concept, the uses, the properties, and also the customization options of the indicator named as linear regression angle. From the name itself, you can make an informed guess that there is going to be one of the derivative indicator of the linear regression, which we saw is the USD JPY chart drawn on the hourly time frame. Here I have added this linear regression angle. If you want to know where this indicator, you simply can do a quick search. If you type in linear, it will appear. Here it is. Oh, sorry. I have mistakenly added another indicator. Now, the concept of this indicator is fairly simple. It is calculated by taking into consideration the difference between the left and the right edge of the linear regression drawn on the calculated period. So, whatever is your calculation period, that calculation period is then used to divide the actual difference between these two edges of the linear regression. And if you know the linear regression concept well, if you have the mathematical background, then this particular indicator is fairly easy to understand. Or even if you don't really come from a mathematical background, then I would suggest that if you refer to my prior session in which I covered the linear regression, then you will get a better idea of how this indicator is going to work. Now, for these indicators calculation, as I told you, the initial readings are taken from the linear regression indicator, and then using those data points, this derivative is calculated. The concept is simple. Whenever we have the linear regression lines inclined on the upper side, as a result of that, the angle which is going to be created by taking the left and the right edge difference is going to be positive. And if we have the lines angles angled on the lower side, if the linear regression lines are declining or inclined on the lower side, you will have the difference between the left edge and the right edge of the linear regression lines on the negative side. And as a result of that, we will have the reading of the linear regression angle in a negative territory. So the classical interpretation of this indicator is whenever we have the reading of the linear regression angle above zero, it indicates the bullish tendency for the underlying instrument Euro USD JPY in this case. And when we have the reading below zero, that is indicative of the bearishness being prevalent in the USD JPY. And if we have steep change happening in the linear regression angle, that means there is a substantial momentum, and steeper the angle, more is the momentum. So you can compare these output of the linear regression values, and using that you will get a good idea of how sharp the move has been in the recent past. And as I said, the strength is going to be more when you have the linear regression angle changing at a faster pace and rising or declining. For for bullish trend, you will need the linear regression angle to be rising sharply, and for bearish trend, the sharper it is in decline, the better it is going to be, or stronger the momentum is. And when we have the linear regression angle values not really going anywhere, simply stabilizing around the same output value, that is indicative of the underlying momentum going sideways. There is not much of a momentum on either side, or you can say that only consolidation is going on, and it is better for us to maybe wait it out, simply sit on the sidelines, or switch to the scalping techniques where we can look for making money, making profit using target price which are relatively smaller. The target risk reward ratio is not going to be that high, but when the underlying instrument doesn't really go anywhere in scalping techniques, we trade with the negative risk reward ratio, but it proves good enough as we are likely to get multiple trades in the same price point. So as long as that range holds, you stand to gain money. So depending on the context, depending on the volatility, depending on the steepness of the linear regression angle, you can determine which strategy to apply at that point in time, and then keeping all these data points in mind, you can trade in a informed manner. So that is the benefit, that is the beauty of this indicator. Now let us see what are the customization tools available to us on this platform in terms of the uses of this indicator. So let us see its parameters, which we can change, tweak, customize as per our requirement. The applied price can always be changed. We get these options of going for different applied prices: close price, open price, high price, low price, median price, typical price, weighted close price. Let us try it out one by one, and you will see there are going to be substantial changes in the plotting of this indicator depending on which applied price you are using. So please pay attention to the graph, the charting of this indicator, and as that is the case, you have to carry out the observation. In my observations, when we use applied price, high price as the applied price, whenever there is upward change in the momentum in the underlying instrument, the high price based linear regression angle will pick up the initial moves quite quickly, but it is going to lag when there is move on the lower side. And when you use low price as the applied price, here we use low price as the applied price, and in that case the momentum shift on the bearish side is going to be captured fairly quickly, but then this indicator is going to lag on the higher side whenever the turn is going to take on the higher side. So for figuring out the bearishness and the bullishness, I think you can even go for two different sets of applied prices and try to see this difference for your own, and then you can make an informed choice based on that, on which conditions which applied price to use. So this is a interesting observation here. Now I will revert it back to the close price as per the default setup. The time period is 14. You can increase it or you can decrease it. What happens is when you lower the calculation period, then that entails less amount of time horizon, and as a result of that, any sharp fluctuation in the recent past is going to get more weightage, and that is going to create these types of situation where the sharp moves on both sides are possible within a short span of time. So you don't really get much of instability, but this is more helpful in the scenario where there is quite a lot of volatility and the price is not stable on either count. It keeps fluctuating, and you want to have a good grasp of these sharply moving prices, and you want the indicator to reflect that as soon as possible. In that context, I think this indicator might be quite helpful, and you can then work around and see how you can utilize this indicator to go for the trade as soon as the initial momentum has been picked up by this indicator. So one way to profit in this dynamic, always changing market is to also look for the shift in volatility and lower calculation period indicators generally are good on that count, but you won't really have that much of stability, and any sharp move in any one candlestick period is going to cause a large impact. So you have to be careful. You have to take the trade-off between the responsiveness response and fast response and higher reliability. As we increase the calculation period, the reliability of the indicator's output is going to be much higher, as we are going to be relying on the indicator signals which are generated by taking into account large number of data points. Now suppose if I increase this to 24, the sharp moves are not there, but whenever things are being sustained on one side at that point in time, these signals are being generated, and those signals are likely to last that much longer. That's how this indicator works. Okay, now I will revert back to the default setup. 14 output. Output is all about this color combination. I think this is also quite good looking color combination, and if you are not really fan of the blue, maybe a funky color like yellow can also be applied if that is your choice. It can also be changed. You can go for different styling combinations, or you can even go for bar charting type of plotting. So all these options are there. If you want to make this indicator look less prominent on the chart, the transparency can be increased. Levels, I don't really think, since this is an unbounded indicator, any particular level is going to be helpful. Maybe 0 can be used as a marker. So if you feel like, you can add a 0 as the marker, and this can be then helped. This level can help us in making it easier for us to judge when things are shifting from one side to another. Advanced, recalculate on new candle only. In this case, this output is going to remain constant, remain stable throughout the current candle if you opt in for this option. Else, the output value is going to keep fluctuating depending on the applied price. Highlight the time period zone, whatever is your calculation period can also be highlighted if you opt in for this option. So you have this option of going for highlighting of the calculation period. It simply makes it easier for you to remember how much time is being included for the indicators calculation. The indicators calculation can be customized further, going to be available. So we have this option, light crude oil or any other instrument as well. Okay, so almost all the instruments on this platform are well supported to work with this indicator. Highlight the time period zone. Coming to the customization of the parameters, the candle period can also be used from the chart, or you can go for these different candlestick time frame. You can go for example, even though chart is of hourly candle period, I can go for half an hourly for using the half an hourly candle period for calculation purpose, and this plotting is then going to work independently of what is the charts candle period. Even if I change to 4 hourly, the plotting of the indicator is going to take into account 14 candles of half an hour each, and not 4 hourly candles. Okay, since we have fixed the parameter at half an hourly each. So that's how these indicators customization option work. Views from the chart, side, ask or bid. We get these two options, and slight difference will be there, not much of a difference. Show indicator on all the periods. If you want to use that, you can have it, else you can simply go for any particular candle period on which you want this chart to be available, these indicators plotting to be available, and only on those time frame these indicators plotting will be available. So here half an hourly and 4 hourly are the chosen time frame for showing up this indicator, and only on those time frames this indicator is going to be plotted. But if I now revert back to hourly, there is no plotting of the linear regression angle, nor on 10 minutes or any other candle period apart from 30 minutes and half an hourly. So that's all from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been included in the bio. So give it a try and let me know how things work out for you. That's all from my side for today's session. I'll be back tomorrow with a new indicator, new concept, new uses. Everything will be new. So do come back. See you tomorrow. Goodbye.